Thank you for joining us for another episode of Cryptocurrent. Just one quick reminder. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. You should not treat any opinion expressed by Richard, the team, and their guests as a specific inducement to make a particular investment or to follow as financial advice. This show and any other Cryptocurrent production is exclusively for informational purposes. All right, what's going on, Cryptocurrent crew? For Cryptocurrent, I'm Stephen Miller, and you're watching another part of our interview series here on the channel. As always, we are here to drive a connection for you to the leaders who are shaping the future of Web3. And today I'm joined by a great one of them. His name is Dan Hannum. He is the COO at ZenLedger. Dan, welcome to the show.
Thanks for having me.
So I'm thrilled to get into this with you today, but just for our audience who may not be totally familiar with you, give us a little bit of background. Tell us a little bit about yourself and how you got into crypto.
Sure. So my background is largely in traditional finance. I went to the University of South Carolina from my undergrad and my MBA, and then spent some time in New York on Wall Street working at some bigger financial institutions, and kind of got bit by the crypto bug, individually in 2012, 2013 when I was still in school, and then professionally in 2015. And so I was fortunate enough to make the jump from traditional finance into crypto full-time in 2015 at a firm called Blockchain Capital, one of the largest and probably earliest funds in the space, and worked primarily on their early stage equity side of the business as an analyst. So I was meeting with a lot of crypto companies that were raising venture capital at the time and building a lot of the core infrastructure for this ecosystem. And that was kind of the first foray into crypto, and was lucky enough about a year into that to be an ICO advisor for a project called Gear, which is a green energy and renewables token. And the advisory board we had was Larry King, very well known, Stan Barty, who runs a firm called Forbes in Manhattan, based out of Toronto, and then a guy named Jim Rogers, who's kind of a legend in traditional finance, and was fortunate enough to get them involved in this project early on. They all put in a few $1,000,000 each and walked away with 5, 10, 15 each in a few weeks. So it was a nice initial investment for them, and they wanted to get more interaction within crypto, and so that's what kind of led into Hannum Capital Management, which was a early stage venture fund. We raised a $25 million fund in 2016, and then a $75 million fund in 2017. Started just to continue to invest into early stage crypto companies, and one of the companies that we invested in was ZenLedger, which is a crypto tax platform, and really saw kind of the use case for that platform as I was trying to figure out my own taxes. I was using Excel spreadsheets and Google Docs and handwritten notes and trying to match them up with like Etherscan and block explorers, and it was kind of a nightmare. So I saw the value from like an investment perspective of what they were building could be very valuable. And then in 2019, one of the co-founders was stepping out of the company to work with his family's office. And I was always looking for kind of the right opportunity to get back on the entrepreneurial side of the business and really build something instead of just investing. And that's what led me to ZenLedger in 2019. So I've been with ZenLedger for about 3 years now. So been in crypto about full-time 7 years, and with ZenLedger about 3 years now.
Awesome. So I guess suffice to say you're a bit of a crypto OG.
I've been around the block a few times.
That's awesome. Well, again, I guess to break down ZenLedger a little bit for our audience, because again, a lot of our listeners are more so crypto newcomers and people who are just crypto curious. Can you give them a little bit of an understanding as to how ZenLedger can help them with their crypto tax reporting and kind of break down essentially how it simplifies it?
Sure. So I guess to start from a high level, there's a few different things that make crypto tax reporting a little bit difficult. And the first is that the IRS treats crypto as property, and they first came out with this guidance in 2014. And what I mean by that is, instead of like forex, where you look at items being treated as a currency, you're only taxed on kind of the end of your activity, right? You can go from dollars into euro, euro into yen, yen into whatever, and there's no taxable event in between. Only when you come out. The property distinction within crypto is what makes things a little bit trickier, because they are treating your ETH and your Bitcoin as separate pieces of property. So anytime you trade Bitcoin for ETH, you are selling your Bitcoin and buying Ethereum with the proceeds. So all of these crypto to crypto transactions make things a little bit tricky to follow. When you look at crypto taxes, there's kind of three main buckets that we talk about. Would be dollars into crypto. So you can go from $1, $10, $100, whatever you'd like, into crypto with no taxable event. The second bucket that we kind of talked about would be crypto to crypto. That involves trades, that involves DeFi, that involves liquidity, that provides or involves NFTs. And then the third bucket is really going from crypto back into dollars, which I think is more like understandable for most people. I'm selling my crypto, I'm getting dollars from it, probably have some taxable element to it. So I wanted to give that context just for people to understand kind of where crypto is taxed and treated from. The second hard part is that within crypto, unlike kind of stocks or bonds, the reporting and brokerages don't really speak to each other very well. And most investors are using multiple different platforms and exchanges. You're using multiple different centralized exchanges, you're using multiple different wallets, you're using multiple different wallet addresses. And so what happens on Coinbase is typically just a sliver of your overall activity. And so when Coinbase or another centralized exchange provides you with a 1099B or a 1099 form, they're only going to be reporting what happened on that exchange. But for most people, not your keys, not your coins, right? You are sending your crypto off of the exchange into a ledger, a Trezor, a MetaMask, and then either sitting it there for cold storage or using that crypto in various ways. And so the value add that ZenLedger brings is essentially we aggregate all of your activity across all of your exchanges, all of your wallets, all of your blockchains into one singular place. That gives you a holistic tax report that encompasses every transaction you've ever had, instead of just what happened on Coinbase or just what happened on Kraken or just what happened on FTX. So I wanted to give kind of like an overview of how crypto is treated, and then kind of like the solution that we provide, and happy to dive into how we do it and all that type of stuff.
Yeah, I mean, it's really interesting the way that you guys do bring in everything. And I think that a lot of crypto tax solutions, at least that I've noticed over the course of the last few years, they've had a lot of difficulty finding ways to integrate things like NFTs and tracking MetaMask as well as every single exchange, because it's easy enough to track an exchange. But now that
Mm-hmm.
we're into this era where things are getting more complicated with DeFi and DAOs and NFTs, how is it that somebody can go about navigating the mistakes associated with crypto tax reporting when you really look at the ZenLedger solution, how it simplifies everything?
Yeah, no, I mean, great point. I think the last 2, 3 years have been really advantageous for us because we've been able to really leverage the integrations and the bandwidth and support we have, and some of our competitors have not. So with DeFi and with NFTs, these things are happening on chain, which makes it somewhat easier to track, but harder to track if you don't know how to look at things on chain. And so what I mean by that is, if you look at like a Coinbase or an FTX, typically they'll give you a CSV file or an API. So essentially, the exchange is saying, Steven did X, Y, and Z on this exchange, and it's somewhat of a seamless transition. On chain becomes a little bit tricky because there's no, username for MetaMask. There's no username when you connect your wallet to Uniswap. There's no username when you connect your wallet to OpenSea, right? So all this activity flows through your wallet address. And so the beauty of ZenLedger is we allow you to simply ingest that activity through your public receiving address. So it's not trying to open up OpenSea and manually enter. I bought it for this. I sold it for this. What was the fee? What was the dollar equivalent? We automate and simplify all that for you. So for a typical ingestion, you're looking at importing your centralized activity. You're then importing your on-chain activity. You're selecting MetaMask on the wallet import tab. You're entering your ETH address, your AVAX address, your Phantom address, or whatever you're using. And then we mix in all that on-chain data with your off-chain data and to provide these comprehensive reports. So we can see that you bought, whatever, $5,000 worth of ETH on FTX. You send it to MetaMask. Then from MetaMask, you connected that with Uniswap and then provided liquidity. Or you connected your MetaMask to OpenSea and used 5,000 to buy NFT 123, and then you traded that NFT. So we can start to see these on-chain movements. The hard part about DeFi and NFTs is really the number of transactions start to add up pretty quickly when you're moving your assets around, when you're providing liquidity, when you're taking your liquidity back, when you're staking, when you're buying and selling and trading NFTs. Those transactions can rack up really quickly. And if you're not using a software, it's almost near impossible to try to track this stuff with a Google spreadsheet or like handwritten notes. So the value add is being able for us to take that on-chain activity and mix it with your off-chain activity from your centralized exchanges or even centralized providers like a BlockFi or a Nexo or a Celsius or a Voyager if you're trying to earn like centralized yield on your crypto. And so that's currently how we treat things.
In a lot of ways, I mean, it really is kind of magic to me because a lot of what you guys are doing, like it's integrating so many different APIs and so many different chains that it makes most other tax reporting software seem very, very rudimentary and like almost understated. You guys have one of, in my opinion, the most powerful solutions out there on the market. And as I'm thinking about that, I can't help but like want to go into this little like subtopic of okay, we're now in this world where the IRS has started making a few more decisions, like this recent development on staking rewards and accounting for airdrops. How does that all play into, the way that you guys report on-chain data and how our wallet addresses actually are interacting with one another?
Sure. Yeah, no, I mean, it's funny you bring up the integrations because we essentially used to say that we were the TurboTax for crypto, right? But when you really look at what we do, it's more like Plaid for crypto because we ingest so many different things and aggregate them in one place. It's a funny thing to see us evolve. I think right now we support over 500 different exchanges, over 12,000 different token types, over 60 different blockchains, over 50 different DeFi protocols and NFTs. So that like bandwidth or that coverage is pretty extensive. When you look at the government, typically they're relatively slow to move and slow to provide guidance. So one thing that makes DeFi and NFT taxes tricky is there's no IRS Section 2, Paragraph 3 that says if you traded a cool cat for a doodle, like here's how it's treated, right? There's no guidance. So we have to take this conservative guidance around how the IRS views fungible assets and basically apply that to non-fungible assets. And so there are some court cases in play. From our understanding, the IRS has not provided specific guidance on the staking rewards yet. And what I mean by that is the Jarrett case, which is the one that you're speaking about, essentially to kind of give guidance or an overview for people who are listening. A couple is essentially saying that staking rewards should only be treated as taxable events when you sell or dispose of your assets. And so the easy analogy is like, let's say I'm a farmer and I'm growing tomato plants. From the current IRS guidance, every time a tomato pops up on my farm, I now owe income on that. But in like reality, right, you can grow as many tomatoes as you want. It's just when you sell those tomatoes, then you have income from selling your property. And so that's kind of the argument in a nutshell is that staking rewards should be treated as non-taxable events when you first receive them and only be treated as taxable when you dispose of the asset. And so they had a great case, and we're starting to see that play out in court, but they haven't gone through federal tax court or IRS tax court. And so the IRS itself has not said that this is the way that we are going to treat things, but it looks like it could be, right? And so right now, what we would recommend for users out there is to file their staking income as income at the time of receipt. That's something that, as you mentioned on the software side, we can easily automate for you. So we can see that every day, every hour, every week, every month, you are receiving 5 XYZ tokens, and those XYZ tokens are worth $5 each. So we can see that you have $25 of income coming in every day, and then we'll aggregate that income, with your airdrops, with your staking, with your mining, with your forks, anything that's ordinary income, and aggregate that together on your income tax reports. So one thing that we try to do is work very closely with the IRS and understand how are they thinking about these things. We want to be able to be in the room with them and guide them on here's how things work, right? That doesn't mean they're going to listen to us and just go with what we say, but at least they're open to listening and not just going to provide guidance without having any knowledge. So we're hopeful that we'll see, increased and improved guidance come out, especially around a lot of DeFi and NFT activity that is kind of in a gray area where you can now take a conservative approach or an aggressive approach. But I think we, as well as our customers and potential new entrants into crypto, want to know that like this is how it's treated, and then you just plan for that instead of having ambiguity.
So I'm glad that you kind of took that on to ambiguity because it's a really decent segue for what I'm curious about next, and that's rug pulls. So right now in the space, more than ever, I mean, it was reported last year that we had over, I believe, $2 billion in scams. And while that's extremely unfortunate, that's kind of the nature of a young industry, right? Like you have to deal with and get through those types of barriers. But as of right now, it's really complicated, at least for some people, to start wrapping their heads around how they can take those losses or show those losses. Do you guys have any recommendations, whether that's built into your software or just in general, for how we can better account for these rug pulls and show that they actually are capital losses, even if it's something like an NFT, where you still may have proof of having an NFT, but it has zero ascertainable value?
Yeah, I mean, the hard part right now is that we have recent changes to how things are reported as lost or stolen that essentially exclude crypto activity. And what I mean by that is typically to report your crypto activity as lost or stolen, you need a natural disaster. And that's kind of hard to have in crypto, right? We have we have some events where liquidity dries up or, assets go down 80%, but it may seem like a disaster to us, but it's not a natural disaster. So the hard part is that to essentially mark your assets as lost or stolen is not as easy or straightforward as you think it would be. And so when we look at rug pulls or we look at projects that may have had good traction and then just kind of died out, the easiest thing for you to do to try to take a loss on that is to have some type of sale event on that. And that doesn't mean you bought it for 10 and you need to sell it for 9. Maybe you bought it for $10 and you're selling it for a penny, right? As long as you have that sale price on it, we can say you bought it for 10, you sold it for a penny, you now have this loss locked in. So right now there's no unrealized losses. So if I buy it at 10 and I hold it at 1, I don't have an unrealized loss of 9. I'm just holding the asset. So the best thing that we've seen is either to use like a harvest address where you can send it to like a burn contract, or to try to sell it somewhere. Go on OpenSea, go on Rarible, go on Super Rare, go on a platform and list it for $1. There's actually a lot of people out there that are building a business around that. They're going up and scooping all these like junk trash NFTs at very, very low cost and just hoping that like one of them pops off to $100 or $50 or $10 and covers like all the low ones that they're buying. So our recommendation would be to try to list it and try to sell it. And that's going to put you in a much better position than trying to market as lost or stolen. The other topic or item that we see a lot with this is more of like scam airdrops, where you look in your wallet and you just see some like random token. And what we used to say a few years ago was you should probably send that to a burn address. You should probably try to get rid of it. But now we've seen that some of these hackers or scammers are embedding kind of, malicious software into these tokens. And if you interact with a token, you can sometimes open yourself up to more risk. And so within that, what we do within the software is allow you the ability to just simply ignore a transaction. So instead of having to buy it or sell it or trade it, you can just ignore the incoming. So we can ignore that 25 XYZ tokens came in. And as long as you don't buy it or sell it or trade it or anything, you're not going to really have a liability on that. So there's ways to kind of get around how to do that. But typically the lost or stolen, or it's going to take more than just marketing as lost or stolen. You're going to have to kind of prove that with documentation. And that's hard to do with a rug pull. It's hard to do if you've been hacked. It's hard to do if you've given up your seed phrase or your passphrase. And so is this other element of was it an actual scam? Did you actually did these assets get stolen for you? Or were you kind of a victim of, a scam, right? And typically the victim is harder to prove. Steven fishes me and I give him my seed phrase. I still gave him my seed phrase, right? So it's like I still kind of fell for it. So it's harder to show that someone actually stole these items from you. So yeah, long story short, would definitely recommend if you have an asset that's trading at 99% down from its value, try to list it for like $1 and lock in that loss from an actual sale versus trying to say it was lost or stolen.
So, real quick, just to clarify on one thing, when you're referring to a burn address, For somebody that is new to crypto, can you give me a little bit more context on how they can go about, sending something like that to a burn address, or even creating a burn address for that purpose?
Sure. So typically the burn addresses will be kind of live. And so for most people, you won't have to make one. Essentially, what you will do is you'll send it to the address. And the burn address is going to be very similar to any other address, right? It's just going to be mostly ones and zeros instead of like letters. Um, and so the key is that, let's say I'm trying to send Ethereum from me to Steven, right? I'm going to ask, hey, what's your address? He's going to say 0x123. And then I'm going to enter that address where it says, where do you want to send this asset to? So instead of me sending that ETH into Steven's address, I'm going to send it to the burn address. And typically, like a quick Google search will show, I have XYZ. What's the burn address here? If you look at Etherscan, if you look at like a CoinGecko or CoinMarketCap, they'll typically have that burn address into the token. So if I pull up token XYZ, I can see the contract address, which is like the origin address of where these things are coming from. And then I'll see other details in there as well, such as API documentation or GitHub repos or things like that. And hopefully we didn't get like too deep down the rabbit hole. But essentially that information should be relatively public, not something that you need to necessarily create. And then essentially to send it to the burn address, it's the same steps as you sending it to a non-burn address. It's just the address is a different. Just like if you're sending it, sending regular postage mail, right? You're going to have an address for this business or this person. And so it's just gonna be a different address. And essentially what that address does, it doesn't have the ability to interact. It just like receives things. And so it's just like this black hole, for lack of better like words, of like you send it there and it just like it's there now and it will never change, it will never leave. You can't get it back. And so that's like the burn, is that you are essentially disposing of the asset and you'll never be able to get it back.
Awesome. Yeah, I mean, I think that is a really great clarification, though, for people to understand, because for the first time crypto investor, it's really difficult to really suss out these things over time, right? You have to have at least, kind of one or two people that you can rely on for just guidance in it, not necessarily financial advice, but, general guidance. And this is a really important topic that I think everybody needs to focus a little bit more on. But now that we've kind of worked our way through the tax side of it, and I think that we've kind of dispelled in our own way a few tax myths, I'm kind of curious about like your general perception and perspective on Web3. So, out of curiosity, in the world of Web3 right now, are there any like specific projects or topics that you find are really interesting in developing that our listeners should be looking into a little bit more?
Sure. Yeah. I mean, I think that's the exciting part about ZenLedger in our business, is that we get to interact with all of crypto, right? Because we have to ingest all this from all of your DeFi, from your NFTs, from your DAOs, because you can't have a 50% complete tax report, because that's not accurate, right? It has to be 100%. So the fun part about my job is I get to work within crypto and not just on like one sector or one unique project. Well, working on one project, but that one project touches a few different touch points. So the nice thing is, between my personal investments within crypto and then through the fund and through ZenLedger, I get pretty good access into some projects. The things that get me excited would probably be kind of the financialization of NFTs is kind of exciting to me, and really like the utility of NFTs. So most people may have heard of like, the typical 10K PFP project, which is, in my opinion, a little bit played out now. It's just like, okay, the next thing is like a banana instead of an apple, or like a cowboy instead of like a dinosaur, right? And it's like, cool. I want you to be able to buy, sell, trade, whatever, whatever you like. But for me, the 10K PFP launch is just not like very exciting anymore. So it's like, what types of NFTs provide utility? And so audio NFTs have been really exciting for me. Been spending a lot of capital on like sound.xyz and catalog.works and items like that, where I can interact with artists that are using NFTs to fund their music development. And so music NFTs are pretty exciting. I think the utility with NFTs is really exciting to me. I don't know if you saw, but I think it was about a week and a half ago, someone was able to use, I think it was like 80 punks and take out like an 80 or an $8 million loan. And that's really exciting, because I think some of us who have been in crypto for a while have a lot of like crypto wealth, but they want to be able to access that wealth to go buy a home or go buy, pay for the kids' college or do whatever, right? And so once you have this asset, how can you use this asset, and where does the utility come from? And so that's something that's exciting for me. And then on the DAO side, I think we're just kind of really early into DAOs in general, and seeing different use cases with DAOs pop up is really exciting for me. You see some like investment DAOs like the Lao or Neptune. You see more of like collector DAOs, like Pleaser DAO, which is like which is like super exciting. So I think DAOs are an exciting area of um, just an exciting area where a lot of innovation is happening. I think we're still really, really early on, right? So like the DAO, or decentralized autonomous organization, isn't really decentralized or autonomous just yet. It's more of like just an O, but we like to call it a DAO. So I think as we start to layer on this decentralization and the autonomy to these organizations, that's what gets really exciting. So right now it's people in the Discord and using Snapshot to make votes, right? It's not really decentralized or autonomous. So, but the promise or the premise of that technology and that stack is really exciting. And then I guess what's really exciting for me is when we look at these items within crypto, the coolest products that we've seen is really leaning into this composability layer. So stacking DeFi with NFTs, then into DAOs, and then the combination of these items. So I think when we look up, we're going to start to see ways that you can use NFTs that are really exciting, and then ways that you can interact with online communities and earn capital, or just have kind of that fellowship or community online. So super bullish on Web3, online communities, social tokens, NFTs, DAOs, and like I said, I think we're just really early on. But I like to kind of sit at like the cutting edge and the innovation layer, and see what's happening and kind of experiment kind of on the fringe.
And see, I really do have a big appreciation for that one to one. The fact that you're willing to step out on that cutting edge and be, willing to explore those new topics in the space, that's always a lot of fun. And I personally have a big appreciation for that as well. DeFi just never really did it for me. But again,
Yeah.
I digress. It just is what it is there. But you have a lot of unique, solutions that are coming out in that space, like, within the NFTs that are wrapping crypto assets like charged particles. And then you also now have additional, platforms out there that are making massive steps forward for DAO infrastructure like Upstream.
Hmm.
Um, they're they really are moving quite fast. And the thing that I do want to say before we wrap up is that fortunately, ZenLedger is at the cutting edge. And I really do appreciate you taking the time to come on and tell us a little bit more about your platform, and how, at the very same time, we can all be a little bit more cutting edge by plugging into ZenLedger and doing our taxes with your platform. So thank you very much for that. Just for our listeners, real quick, I do want to make sure that I mention we do have a promotional code for you if you want to try ZenLedger and get on it this year for your tax reporting. You can use current 10, that's current 10 at checkout over on ZenLedger, and you'll be able to get a little discount on your ZenLedger subscription. But before we go, one quick thing I always like to ask our guests is there a final thought that you want to leave our listeners with, or tell them a little bit more about where they can connect with you?
Sure. I mean, I think one thing that we've seen since I started in crypto is people that had a hesitancy to get involved within crypto because of an accounting and tax perspective. They run businesses outside. They have real estate. They have stocks, bonds. They just didn't want to like mess up their taxes by getting involved in crypto. And so I think the value add that we provide from ZenLedger is allowing new entrants and existing entrants to easily comply with existing tax regulations and have an easy, clean, simple, and cost effective way to do that. And so our job is to be able to allow you to go try out these things, go buy an NFT, go use an NFT, go sell one, go trade, go provide DeFi, or provide liquidity. We joke all the time that I think the net new users can come in from Kanye and not compound. And so this culture and community and capital is so interesting versus just where can I earn yield on, but how can you layer those on top, right? So I guess my parting thought is just, if you're kind of sitting on the sidelines or haven't got into crypto, we'd love to have you. We want to streamline and automate this stuff for you so that you can ape or degen into whatever you'd like, and know that throughout the year and at the end of the year, you can get your taxes and portfolio management handled. I guess where to find us. I'm pretty active on Twitter. My handle is Hannum, DHANNUM8. Our ZenLedger handle is ZenLedger.io. Maybe we'll link them in the show notes as well. So if you have additional questions or need help, let us know. I guess the very last thing I would add is that we have a few different options for users. And what I mean by that is we have more of like a self-service option. So if you use like a TurboTax or an H&R Block or a Tax Act, and you typically use that to file, we have partnerships with all those platforms where you can simply take our crypto reports and import them with your W-2 or your K-1 or your 1099 or whatever activity you have outside of crypto. We then also have a tax professional suite. So if you have a tax professional that you work with, you can simply invite them into our suite and they can simply log into your account, download all your reports, and file them for you. And then the third option is we actually have tax professionals and tax attorneys on staff. So if you're looking and saying, hey, I just want someone to go do this for me, I want them to handle all of my crypto, non-crypto activity, we have that as well. So we can kind of support you whether you're more of a self-service or you need that kind of high touch point. So yeah, no, I appreciate you having us on, and we'll link to some of the media or Twitter handles in the show notes, and happy to connect with anyone offline and be a resource for you guys moving forward.
Awesome. Dan, thanks again so much for joining us. It was a really great episode today. For those of you at home that are joining us, make sure you like and subscribe on our YouTube channel, give us a follow, and review us on your preferred podcast platform. But until next time, we hope that you'll join us again. Stay cryptocurrent. We'll see you next time.